Well, so again, let me know in the comments if the audio and the video is working well, and hopefully there are no issues, there are no technical difficulties for all of you. So happy to be here, and Friday morning, we'll see what the markets do. So far in the month of April, the markets are indeed lower. They're down by a little bit over 2%, but that is still a significant improvement compared to what we have witnessed in the entire month of April. At one point, we were down over 8%. So markets were certainly significantly lower than where we are at the moment, and we have seen a very nice recovery from the markets overall. The market breadth has been improving, so you can see that majority of stocks, you can now see 70% of stocks now are trading back above their 20-day moving average. 32% of stocks and 32% over here, both trading above their 50-day and a 200-day moving average as well. So market breadth has been improving. A lot of liquidity flooding back into this market. Gold prices have been plummeting a little bit. And of course, we're seeing a very, very risk-on environment in the markets as well. So again, give me a thumbs up. Please let me know if audio and video is good. I just want to make sure there are no technical issues. And again, I've got another live stream scheduled for later today when we're going to be unboxing this over here. That's the package that came out earlier in the week. And I've been itching to open this. I was like, man, I can't open this right now because, I wanted to wait for the weekend. I wanted to wait for literally Friday. I was going to open it tomorrow, but I was like, you know what? Today, market open. Let's just do it. Let's just get it done with. And I'm going to celebrate with all of you. So do me a favor, the second live stream, it's not going to be in this one, but the second live stream that I'm going to be going live again after the markets open. Definitely tune in, definitely join us during that live stream. Share that with your friends, family, other subscribers, other members, and we will celebrate this together. And I will be taking a lot of questions. So it's not just going to be about the market. It could be about anything, about our entire journey. So I really want to open this up for everything. Anything goes. And I'm also going to be celebrating with all of you with some sparkling wine or a champagne, just one glass, little bit, just to celebrate with all of you. So we're going to be doing that later today. So wasn't this supposed to be at 3 p.m.? Well, right now it is already 4:30 here in Dubai. So I decided to go live a little bit earlier just to test the audio video, just to test the overall Wi-Fi speed, and hopefully I'm not having any issues. And of course later today we're going to be doing the unboxing, and I'm going to be opening it up for any questions about the market, questions about our entire journey here on YouTube. It's taken us 5 years? I've been creating content since 2018, but didn't really get into it until COVID. So 2020 is when I really started to put out a lot of videos, and now we're in 2025. So yeah, it's been a crazy journey, roller coaster. And Kevin says, let's get hammered. I mean, this week's been crazy, right? This week's been absolutely wild. You've got so many individual stocks that are up this week by a lot. I mean, you got the S&P up over 3.8. You got NASDAQ here up over 5.4. And then of course, the likes of Tesla up 7.5%. You've got Nvidia this week, which is up over 4.8. So a little bit of that momentum coming in. And of course, not to mention some of the more leveraged plays like SOXL is up 30% this week alone. And we got TQQQ that's up over 15%. BITX, another one of my leveraged plays, has a very strong week, up over 21% as well. So let's get hammered. Kevin says we're day drinking. So yeah, that's one of the things that I was like trying to figure out. Should I do it my evening or your evening? Because I know a lot of you guys are from the US, a lot of you guys are from North America, and so I was like, do I really want to be having fun, or do I want other people to be having fun? But I was like, I can be drinking mimosas in the morning and I can have them have fun in the evening. But I was like, you know what, then it's just working around a lot of logistics. I was like, I'll just do it during market open. All right, I'll do it during market open, and that way we can have a lot of people join in for this live stream. So right now, let's get back right into it, into the market. So, let's talk a little bit about what's been going on with the market. Google, of course, beating earnings expectations here. Very, very strong numbers coming in out of Google. Over $90 billion worth of revenues coming in versus $89 billion of expected revenue. And EPS, what a strong beat in profit for Google. And I think that's one of the reasons, Google's been maximizing on profitability, right? Over the last several years, you'll notice the last several quarters, we're talking, 4, 6, 8 quarters, Google's profitability beat has been very, very strong. I mean, it's been double digits for the company. And this is exactly what I expect out of Amazon over the next several years as well under Andy Jassy, where they start really prioritizing profitability and bottom line. I expect Amazon to kind of follow in the footsteps of Google, coming in with some very, very strong beats on bottom line as they start to prioritize earnings per share. YouTube revenue came in with a slight mess. And, to be honest, I've actually seen that myself. The revenue per 1,000 views that YouTube likes to track has been trending lower over the last 3 to 4 years. So for every 1,000 views that, content creators take on YouTube, the revenue you make has been trending lower. And it's not a surprise because there's a lot of other avenues for advertisers to advertise as well, right? YouTube is just one of the many platforms now that advertisers are using to advertise content, right? For marketing purposes. TikTok is definitely one of those platforms that has seen significant amount of user growth, as well as, of course, Reels. Then you've got YouTube advertising and Amazon advertising. Amazon advertising, I was kind of like the early ones talking about that piece, exploding for Amazon. And now it has actually eclipsed YouTube advertising revenue as well. Google Cloud revenue, again, Google is kind of like the third in terms of its market share. Amazon Web Services, and we got Microsoft Azure. We got Google Cloud revenue coming in at 12.26, just slightly missing expectations. And the traffic acquisition cost coming in 13.75. Now, in terms of advertising revenue, just came in short of expectations. Overall advertising brought in $66.8 billion, up from 8.5% year over year. So that is, of course, their search and other segments. So that's their advertising search business. And then looking forward here, Google's business chief said the company is not immune to the macro environment, and Donald Trump's decision to end the trade loophole next month will cause a slight headwind to our ads business in 2025. I would say that we have a lot of experience in managing through uncertain times, and we focus on helping our customers by providing deep insights into the changing consumer behavior that is relevant to their business. Google, of course, is rallying pre-market. It is up a little bit over 3.3% at the moment as well. Okay, do your midnight or evening, Milan says. Yeah, you'll have to make it clear you're in Dubai. People are going to get concerned. No, I rarely drink. I never drink in my life. I'm talking, I don't know, once every few months if it's a special occasion. And I have a rule to only drink or have one, small drink if I'm celebrating something. If I feel like I deserve to celebrate. That's kind of like my rule. Otherwise, you guys know that I'm very, very focused on health. I mean, I joined this new group activity called Berries. Berries is actually in the US and Canada as well. It is a group workout for 40 to 50 minutes. It's a HIIT workout. And I've been doing that 4 or 5 times a week. And man, it is challenging. It is actually pretty hard to keep up. It's a HIIT workout, so you're on the treadmill, and then you're off the treadmill, you're working with weights, and there's a lot of stuff for 50 minutes that you have to keep going, and you burn like 1,000 calories in an hour, and it is crazy. So yeah, I mean, just been focusing on a lot of my health. Like I said, I rarely drink, but I think it's important to take a break, to slow down sometimes, to really look back at your journey and how far we have come together as a community, as a team. And like I said, it wouldn't be possible without each one of you. So I want to celebrate, I want to take some time, to celebrate these moments as well, because otherwise it's meaningless, right? I mean, we want to give it purpose. So yeah, I mean, I can attest to this. Both times we had dinner, you didn't drink. Yes, Milan, that's true. I didn't. So like I said, I really do. And I don't even know if I will have a drink today or not, but definitely we'll do the live stream with the unboxing of this beautiful silver play button that YouTube sent over. It is a little bit smaller than the previous versions for whatever reason, I don't know. But when I got this, I was like, damn, this is a small box, but nonetheless, it's definitely an award worth celebrating. So. Okay, how long are you going to be live today? So I'm actually going to be live right now until market open. So I'm live for the next 40 minutes. I will be live until market open. Then I'll take a short break, and then I'll come live again, primarily for the unboxing. But right now, we're talking primarily the markets. If you have any questions, options, stocks, trading, investing, the macro environment, fundamental catalyst, recession environment, whatever questions you have, I'm happy to answer over the next 40 minutes until market open. And then I'll take a little bit of a break, and then I'll come back live again to do the unboxing. All I'm asking is that you share that with your friends, family. I'll share the link for that stream, and we all can be together to do the unboxing as well. The only reason I'm waiting a little bit is because I want to have my family over video call as well. So they're a little busy right now. Mom's at the office, dad's at the office. So I want to have them come home, relax, and then I will do the video call, and then I'll do the live stream with you guys and with my family as well to do the unboxing. So, okay, let's do this. Go Steve, congrats man, been with you since 2020, 2021. You're level-headed and great information has definitely helped me stay cool in these turbulent times. Man, that's incredible. That's amazing. I'm so happy to hear that. And, here, we discuss very objective data-driven analysis. And one of the things is that if you find a high-quality asset, hold on to it. If it's undervalued, if it's got a lot of potential long-term, there's no reason for us to sell it despite what the market circumstances might be. That's the philosophy that we've applied for a very, very long time. That's the same exact idea of defense investing that Howard Marks and Warren Buffett have applied. Of course, it's much harder to find good deals in a market where price to earnings multiples and valuation multiples, if we look at, are so darn high. But nonetheless, there's still going to be opportunities every so often. Like, for example, the bear market that we just witnessed. So you're going to find opportunities. And that's when we have to be very level-headed, and we have to have a plan in place. And the only thing is to just execute when the opportunities are right. Okay. You mentioned rolling or closing some of your options on NVIDIA when it hits 120. What option dates are you considering for then? So I start, with the weekly options first, and then if the strike price gets breached, that's when I start rolling those options out and above, given, considering if I want to hold on to my shares or if I'm comfortable letting my shares go. So I did sell NVIDIA calls yesterday at 120. Now, 120 is right now, based on where NVIDIA is trading right now at $106, $107, is still going to be about 12.3% away. And I've actually sold calls 2 weeks out. That's still before the earnings, actually a lot before the earnings. My expiration is May 9th, and NVIDIA is reporting on 28th, right? So the May 28th, so end of May. So I still have plenty of time to either roll or let these options expire. My estimate is that these options are going to expire worthless because the delta was still, pretty low. But again, we'll find out, once May 9th comes. If NVIDIA is trading above 120, I will simply roll those options out and above. Right now, I still have the 140 calls on NVIDIA. I've actually got 6 calls at 140, which are up like 86%. And I'm planning to close those out once it breaches over 90% profit. I'm actually surprised that it didn't get up to over 90% when NVIDIA was trading as low as $86 because that was way out of the money. So it didn't really breach over 90%. It's still kind of hovering around 86, 87%. So I would be closing those out. And then the 120 calls, I will be planning to roll them out if NVIDIA gets up to those levels. Okay, perfect. Do you invest in Asian stocks except China, Singapore, India? I made some research and I think there are a lot of good deals to find there. Yes, so I do invest in Indian stocks. Being from India, I have a little bit of an idea of Indian companies and, some of the conglomerates and some of the, really good sort of large cap names. So I've been investing in Indian stocks for a while now. Nothing sizable, but still a little bit of diversification there. And for people who have been who don't have direct exposure to Indian equities, I've talked about INDA. So INDA is an ETF that, we started investing, or I started talking about it back in March of 2023. That was like literally in our Discord. And since then, of course, it is up nice 41%. Of course, we did go through this sell-off, right, about 20%. So Indian markets actually went through a bear market before the US markets, and they're now starting to recover before the US markets as well. So you can already see that, IND is already up over 12.5% from its lows from back on February 24th. So they kind of bottomed. They sold off before the US markets and also bottomed before the US markets as well. So yes, I do have a little bit of exposure in Indian markets. Did Adobe make it to your shopping list during the sell-off? Yes, Adobe is part of the shopping list. It is one of the 37 names that I have in the shopping list, with the buy targets also included. Okay, let's see. Still sitting on a lot of cash. I was waiting for the markets to turn around to buy in. Is it time looking at Microsoft and Google? So Shane, that's a great question. And one of the things that I mentioned in my previous updates is the risk of waiting for me is far greater than the risk of buying. Okay, and I was just like thinking about how you can never time the top or the bottom, right? You never really know where the bottom is for the market. And so instead of focusing on where the market bottom might be and when's the perfect time to start buying, what I focus on is when is the perfect environment to start buying, right? Which is to say that when the risk reward is getting favorable again. When the markets were at an all-time high, right, for the S&P 500 at over 6,100, you want to take a little bit of a step back because risk reward is not favorable. We're at an all-time high, valuation multiples are at an all-time high. You've got market concentration, market breadth, everything's overbought and overextended. So you want to take a little bit of a step back. But once you get those deals, when S&P is down like 15, 18, 20% from all-time highs, can it go lower? Yes, absolutely. Nobody knows how low can we go. But the risk reward's considerably better than where it was. So I like to sort of start dabbling into the markets again. I like to start deploying capital back into the market because I don't know where the bottom is going to be. I don't know where the markets are going to, find that bottom and start rotating back up. And those are the unknowns. And so if I don't have the answers to that, I don't want to pretend like I do and feel like, okay, there can be better deals and better deals and better deals. And so the risk of waiting for me has always been greater than the risk of buying because risk of buying creates what? When the risk reward is good, I'm buying at a good price. Risk of buying does what? It creates a temporary loss of capital. Okay, market drops another 5%, 7%, 10% from those levels. I buy more. So risk of buying creates a temporary loss of capital, whereas if you're waiting and waiting and waiting and the market rotates back up, then that's a permanent loss of opportunity. That's literally, permanent. That's a loss of opportunity. So for me, it is very important, as long-term investors, as all of us, to always recognize that we have no idea where the markets are going to go. We don't know where the top is. We don't know where the bottom is. And all we're really trying to understand and identify is the risk and reward. Is my capital invested in the market today worth it? That's the real question. And if you can answer that question with a confident yes, that, okay, the risk is worth taking at these prices, then nothing really else matters. So for me, like SOXL, TQQQ, I'm one for not going into leverage positions, but I like the risk reward that I'm getting for those ETFs. I like, the fact that they're down so much, considering that the underlying assets like NASDAQ and SOXX are down, 15 to 20%. I think SOXX might be down way more than that, 25 to 30% from its all-time highs. So you can see that, from its highs of 260, SOXX, which is the semiconductor ETF, was down over 44%, right? Ridiculous amount of selling pressure. And this right here was kind of an area where I was like, okay, I need to accumulate SOXL, and I'm still buying, but I also don't want it to be a super, super large position because it is leverage at the end of the day. And of course, it's rallied over 23, 24%. And obviously, SOXL has benefited from that as well. So I consider these to be somewhat asymmetric risk reward where, okay, I'm risking a little bit, 10 grand, 20 grand in SOXL. And if it goes up 100, 200%, that's a nice swing trade. So risk reward, very strong. And that's really what we're looking for in the market. So a little bit of a longer answer, but hopefully that gives you a bit of a sense and an idea on how to move forward. I was wondering if only using technicals, what is ANET's next resistance? Okay, so Arista Network, this is also part of my shopping list. Very, very good company. I would encourage you to look into that as well. So from a technical perspective, very oversold on the weekly time frame. You can see the RSI, the MACD, L3 banker oscillator, everything's been selling off quite a bit. And this was the overall trend for Arista Networks. It was making some higher highs and of course some higher lows over here. Nice little uptrend until finally broke down pretty heavily. So what I would put down as a resistance to answer your question is actually going to be exactly where it's trading right now. It's going to be in a range between $76 and $82. So that $6 range is what I would consider as a little bit of resistance for Arista Network. Why? Because we have gotten rejected here previously. So this right here, resistance, which turned into a support, and a little bit of resistance again. So that would be sitting right there for Arista at $76 to $82. Okay, so Arista Network we covered. Can you please break down Enphase earnings? Yes, so let's take a look at Enphase. Enphase and PayPal, by the way, I had to take out of my market updates because, again, PayPal is still a very good company. Enphase also a very good company in my opinion, but fundamentals are good. Different stories. PayPal fundamentals continue to be very strong, but the stock's momentum, the overall desire for investors to be in PayPal has been evaporated over the last 4 or 5 years. I mean, it's been a dead money stock for a long time, and I think it's finally for me, it's time to bite the bullet and take the loss, because it's the only red stock in my entire portfolio. Enphase, I had my shares called away from the covered calls that I had in the 120s, or was it 120s? Might have been hundreds. Where it was, like right on these levels here. And of course, since then, the fundamental story has changed because the revenues came down, earnings came down. It actually generated losses for the first time in a long time. And, we've covered this, extensively on the channel. So support level right now for Enphase is going to be $44, $45, coming in with yet another huge miss on revenue and EPS. So, kind of non-reactive right now, but support level is going to be staying put at 43, 44. Their Europe penetration, that is the most important piece. And, I've said this before during the earnings call as well for Enphase, that they've got a great product. It's just people don't have an idea on how this works and how they can benefit from Enphase. That's the biggest issue. It's the marketing piece, because it is a very technical product. At the end of the day, it is a very technical decision for people to install solar panels and to use Enphase's system as opposed to going off the grid. So it is a bit of a technical marketing problem for Enphase, in my opinion. All right, so Enphase we covered. Vault, Caddy, congrats, you deserve it. I know this because I'm watching your every video since March 2020. Thank you so much, Vault. I really appreciate that. Greed itself can be a catalyst. So if there is expectation of China deal, price might just grind higher and higher and higher. You're one of the YouTubers who says what it is rather than what you think. Thank you so much, Rax. Appreciate that. What is my SOXL average? It's in the 11s, low 11s. I think might just be in the high 10s also. I have to check, but yes, it is in the... I think last time I bought it was around I picked up a couple hundred shares around the $10.95 to I think $11 range. So that is where I would expect it to be. I have to check and get back to you, but I'm assuming it's going to be low 11s. Brian, are you planning on rolling your Palantir call if necessary, given any new developments with the equity? So yeah, 120 call is what I have. We got up to that level at 125. It's crazy. We got up to 125 and then we got sold off. But we'll see. I mean, if Palantir breaks through that 120 level, gets up to 130, 140, then yes, I could see myself rolling out of my Palantir calls. Rack says, breaking: China and the US are not having any talks on tariffs. China embassy, the US should stop creating confusion, is what Chinese embassy said. Yeah, so that's exactly what was the discussion yesterday in yesterday's market update, where the Chinese pretty much were blatantly saying that we're not having any discussions, guys. There is no ongoing trade talks happening between the US and China, and I was only speculating that it's possible that Trump and Buffett are creating this environment where they are making people believe that there's discussions happening. And Trump even said that they are having discussions, and who's they? God knows. Nobody knows. It's mystery. But that is, I think, probably to calm the markets a little bit, that, okay, we've got this under control. We've got a trade deal coming. There's negotiations happening in real time, but in reality, it's possible that there might not be anything happening. But that's why we have to be careful. And look, there's a lot of market technicals that we can look at, and I can go over volatility, and I can go over market thrust, and I can go over technical levels. But none of that really would matter at the end of the day if this trade war escalates or de-escalates. I think that's really what the market's waiting for. So what really happened, in a very simple term, in a nutshell, is trade war escalates, liquidity floods out of equity. So it's a risk-off environment. Investors want to sidestep all this volatility and uncertainty. They don't want to be in stocks anymore. Trade war de-escalates, money flows back into the market, and we're seeing these rallies once again. So that is really what's happening on a more back and forth basis for US-China trade war. Okay, let's see some more questions. Why Buffett ain't buying? I think we're gonna find out, if he's been active with buying, like in the future quarterly reports. So I don't think we're gonna get these real-time alerts from Warren Buffett. And I think at the end of May is when they have their shareholder meeting. So they might have their shareholder meeting soon. And he might, discuss more things about the market and the environment. He might take some investor questions as well. But right now, so far, we know that he's been sitting on 30% cash, which is, amounts to $300 billion. So that's a lot of money. But yeah, a lot of people kind of feel that, he sidestepped a lot of this volatility, and, he was, brilliant to sit in cash, but he's not all in cash. 70% is still invested in equity. So he is still net positive on stocks. Okay, what platform is best for trading? Depends where you're tuning in from. Depends on what part of the world you are in, and we've got a broker list in our Discord, so you can check that out. It's going to be broken down by country, so depending on which country you're joining from, you'll be able to see all the brokers that our members are using. So, we're not affiliated with anyone in any way. It's just we wanted to create a list for all the brokers that our members are using from different countries, because we do have a global community. And so if you're joining us, you can check out the broker list, see what platforms other people are using. Okay. Margit, I just checked. I gave my first like to your video on June 10th, 2022. Since then, I've also been a member of the MoneyVest community. Thank you for the great work. MoneyVest platform, really well done. Thank you. I appreciate that. And we're doing some changes on the MoneyVest platform. It's going to be redesigned with a new UI, and there's going to be new features coming up very soon for the NASDAQ's MoneyVest index as well. We already have the S&P 500, and we're going to be working with more data sets and more really, really cool out-of-the-box solutions coming out for individual stocks and for the broader markets as well. So stay tuned for that. Some big announcements later this year with regards to the MoneyVest platform. So I really appreciate that. And let's listen in on what's happening with the market right now.
Confiscated 360 million doses of fentanyl, enough to kill every last 4 years alone. That has to stop. That's all Chinese chemicals coming in to the Mexican cartels and moving across our border. And transshipments of cars and other goods is the balance of the increase in trade between the U.S. and Mexico and the U.S. and Canada. So believe it or not, our Mexico and Canada discussions are really solely focused on China. It's not really on Mexico and Canada. And so the answer, Becky, is I think the entire world is going to focus and have to choose between the Western values and a Chinese position in Southeast Asia. I actually think that's how this is going to play out.
Kyle, I want to thank you for joining us this morning. Look forward to talking again soon. Squawk Box coming right back. Pleasure to be here. Yeah, let's do
that. Yeah, so, all right, let's get back to some of the questions here. So Papa Same, I find myself having difficulty understanding how much free capital dry powder to have in what periods. Do you have personal rules on this? Yes, so we have a liquidity framework that I have shared with everybody. This I think is going to be very, very useful for all the beginner investors, and I highly encourage. I think this is available for free to download for everyone, and I highly encourage you to just have this framework in place so that you have a bit of an idea on how to operate your cash levels and your emergency expenses. So on the left, you've got simple savings account, right? So how many months of expenses should you have in liquid cash if there's any emergency, right? So call it your emergency fund. This is an account that you don't really invest. This is not subject to market volatility. You want to keep that aside, away from all volatility, and in a safe place in a money market fund or a simple savings account, so that you're not living life on the edge, because life is unpredictable, things can happen. So you really want to have multiple months worth of expenses saved up. So this essentially shows you what threshold you're at. For me personally, I think a minimum of sufficient to secure is something that everyone should aim to achieve, is having 6 to 12 months worth of expenses, monthly expenses saved up in a liquid cash savings account. And once you have that secure, then we move on to anything over and above is ready for investment, right? Ready for being invested in the market. And this is when the percentage of your portfolio comes into play. So, the way I personally look at it is in times of all-time highs, when the risk reward is not favorable, and that's open to discussion, right? That's the subjective piece, because there's no rule out there that can say that, okay, markets, when they're down 20%, they're incredibly cheap or undervalued, versus when the markets are up at all-time highs, that they are overvalued. There's no rule that says that. Markets can still be undervalued even at an all-time high. Same with stocks. Stocks can be undervalued even at all-time highs, and stocks can still be very expensive even after being down 50% from all-time highs. So there's no rule that says that, okay, just because it's down 20%, that automatically makes it undervalued. No. So that is subjective. That's what we have to judge for ourselves. But if I feel that markets right now, the risk reward is not great, I want to take a step back. This is not a good time for me to be putting money into the market because I'm buying it at very expensive levels or overbought levels. Then I start to increase my cash exposure. And, this is exactly what Warren Buffett has also used in his lifetime over the last 50 years that he's been doing this. He plays around with his cash exposure, right? You'll notice in the past, 07, 08, his cash exposure was at 25-30%. Why? Because he anticipated something that might have been on the horizon. He was looking at the 07, 08 euphoria and greed and so much free money and cheap money running around. He was like, okay, I want to take a step back. Risk reward is not good. And let me just increase my cash exposure. So what does he do? He gets it up to 25, 30, 35%. And then he starts deploying that money into the market during the crash. So that's exactly when the markets come down and there's a lot of deals out there, the risk reward gets better. Then I start to come down on my cash exposure. I'm looking at 5%, 10% because a lot of that money is going into the market. So, you can definitely download this spreadsheet. You can take a screenshot if you want to, but this is what I've been using as a framework to kind of navigate different market environments. And the way I kind of increase my cash exposure is, putting in more money through savings or selling calls or straight up trimming positions if I need to rebalance. So hopefully that gives you a little bit of an idea on how to go about it. Okay. Thoughts on consumer sentiment at 10. I mean, it's been improving a little bit, Kevin. I think it's gotten better over the last couple weeks, couple months. But the manufacturing index and PMI index has certainly been lower, but it's now starting to improve once again. So one of the spreadsheets that I shared with everybody was the recession indicators. So this is the bird's eye view, right? This is giving you a full idea on how good or bad the economy is. And so this is going over the CPI, which is your consumer price index, and your PCE, personal consumption expenditure. Then you've got your GDP, then you've got your consumption expenditures here again. You've got your retail sales, unemployment growth, unemployment rate. You've got your JOLTS to unemployed persons ratio, initial claims, personal savings, manufacturing PMI, services PMI, and the delinquency rates. So as mentioned in the other video, overall, I think the economy still looks in good shape. But of course, we could be looking at a completely different picture, months from now, once we get the full effects of these tariffs, which is to say that the trade war between US and China, if that materializes and escalates, then yes, things can be much, much worse.
You have it. You can't really follow it. He says that he talked to Xi, but
right. He, Xi.
But of course, the Chinese seem to be indicating otherwise.
Right.
And I guess the takeaway is there are no talks of any significance that we're aware of, at least. Don't you think we would be if they really were? I think robust talks going on?
Yes, I do think. And we don't know what Navarro's up to. Obviously, Navarro is the hardest line American. There's 340 million of us, and he's the hardest. And I'm not sure exactly where he is positioned versus Bessent, which Bessent seems to be oppositional to a bunch of people who are hardliners. Don't you feel?
Yeah, well, you have a better feel on Navarro. I guess coming back to the broader market, though, a week ago, we had a lot of uncertainty in terms of where things stand. What do we know a week later in terms of informing both market participants and perhaps even more importantly, people who are sitting at the top of organizations making asset allocation decisions? What do we know this week that we didn't know last that conceivably would be a reason for what has been a significant rally until today?
Well, look, I think that it's about blinking. Nobody's blinking. And I think that we obviously have $440 billion at stake. They have like $150 billion. Is there $150 billion more important? I know every day they issue things, Carl, which make me feel like that they don't need us. Whatever, they don't need us at all. And then every day I meet CEOs who have somehow, almost mystically, got out of China. Or made some. I was with the CEO last night, and the guy says, I was saying, wow, the China, I can't remember, it was a private conversation. You guys must be, are you ready? And he said, what, you think we just sat there and took it? We had, this is a guy who does hundreds of millions of dollars of business in what I thought was China, gone. Gone.
They're not selling in China, or they're not buying.
They're not building
making
in China.
Okay, right.
And and he made it sound like that I was a rube, that they would just sit there and take it, and then went on to tell me that the only people who sat there and take it were the people who just didn't bother to even listen to what was being said, and that the exodus is extraordinary.
Yeah, well, there's the exodus, the migration of manufacturing. That's why this Apple story and the FT is so important, Jim.
Yes.
But then the incoming freight into California ports, it's the cover of the San Francisco newspapers today. Apollo has some charts about basically inbound trade collapsing, and what that's going to mean for empty shelves this summer.
Well, you got to remember, it takes 2 to 3 weeks before you'll start seeing it. So, yeah, Liberation Day, right, would shock people. Then you got to take 3 weeks, and then after that, it's like, wow, I don't know. I don't know what I can do. And people are talking about selling Union Pacific off of it. I think there's an embargo. It's just an embargo. And I think that the companies kind of reminds me of when Saigon fell. I mean, there's companies that are like hanging on to the skids of the helicopter. They're trying to get out of China. And then there's the other companies who are in China. And David, they kind of didn't get the memo. They missed the Navarro memo.
I guess so. But all of that taking us back to uncertainty. And I guess my question to you earlier, which I don't expect you to necessarily answer, are we in a less uncertain place this week than we were last week in terms of understanding trade policy and what is coming in terms of what the tariffs ultimately will be, and therefore understanding your cost structure and your manufacturing and everything else that CEOs need to take into account in terms of their longer term planning?
I think that this was the week where people said, I better have an alternative supply chain. I just have to, wherever it is, which is going to hurt the gross margins.
It takes a while to build an alternative supply chain.
I think that,
by the way, even to
yes.
Apple, we've talked about moving iPhone production. I've made the point based on conversations I've had that it's not as easy to get some of the key tooling out of the country that you need to, and or the specialists who understand how that works and the engineers and the like. It's not easy to move your iPhone production. And this is the biggest, most storied company when it comes to actually their supply chain.
Okay, but let me give you a counter to that. Speaking to a major CEO at a major tech company who said, do you think that we didn't learn anything from COVID? COVID was a total shutdown China, and we learned to move away from China. And China misjudged what we learned during COVID.
Agreed. I hear similar, but what I hear is this reminds me of the period of COVID because we had no idea what was coming.
Well,
that's the analog that I hear.
Okay, so then go buy Alphabet. I mean, but the world's divided between companies that need or connected to China and companies that aren't, or surprisingly aren't, like a Hasbro, not as bad.
Yep.
And
upgraded today.
Yes, and then you say to yourself, okay, does it have China? And if the answer is if it has China, then it's like, it's forget it, shake. It really is that, David.
Well, let's not forget, we still have not even a 90-day. I don't know where we are now in terms of the reciprocal tariffs that have been held off on.
Right.
We still don't have clarity there either. The president in this Time interview said, I've made 200 deals. And the reporter said, you've made 200 deals? And he said, 100%. And then he asked, well, with who? And there's no real answer. 200 deals. Jim.
What do you hear about Jack?
Where are they?
He says, in his words, because the deal is a deal that I choose. So I think he's defining a deal as some sort of unilateral decision on a rate. I don't know. It's hard to decipher.
I was talking to someone who's in on the Japanese negotiations. And I asked for color. And he said, they're colorful. But that someone's playing very hardball in our country, and I presume that the someone is obviously our president. And I said, does he know that you are our friends? And he just didn't respond. I thought it was interesting.
Yeah, Nikkei's got a piece out about Bessin in South Korea. Bessin suggests that we might get some movement next week. The Koreans say early July. And it's even more interesting because we have a free trade agreement with Korea. We've had it for 20 years.
Okay, so my insight on Korea, I actually have insight on this. I can't believe I do this stuff. My insight on Korea is that they are on the loved track.
The what?
They're loved. That they did okay, so Korea builds plants here, right? And they're not the plants like the German, they're not assembly plants. They make everything here.
All right, so I think I can only handle a little bit of Kramer at a time. Can't handle a lot. But Yes, let's take a look at XLS. This is a company that's also fallen off a cliff quite a bit, down over 75% from its highs. Support level is now going to stay up at $33, $34. Another company that, on a quarter-over-quarter basis has seen its revenue decline. And this is something that is very important for fundamental, long-term investing as well, is when quarter-over-quarter numbers start to really taper off. And you can actually see that on the platform as well for our MoneyVest. And I'll show you the biggest example of this is, of course, Enphase. If you come over to Enphase, come over to fundamental analysis, then we're going to look at the income statement on a quarterly basis. We're going to toggle to 16 quarters. And the only thing I'm going to show you is the revenue. Like, take a look at the revenues peaked out in, let's say, 2023. We're talking second and third quarter, and then absolutely plummeted. And then now we're starting to recover back up slowly and steadily. If I pile on the net income over here as well, same thing, right? You'll notice the net income essentially went to losses, and it's now starting to rotate back up. Now, this is happening with XLS as well over the last 3 to 4 quarters, where the company's fundamental picture has dramatically shifted a little bit. Revenues have been coming down, tapering off, and then bottom line net income has also slightly rolled over, right? So those year-over-year comps are not looking very good anymore. Instead, they're seeing some declines. So there are some stocks, some companies that are going to be very cyclical in nature. They're going to be up and down, but fundamentals, I think XLS continues to be very good, very strong, and valuations also become very, very cheap for this company. On an annual basis, we're looking at $200 million worth of net income with a market cap that's now sitting at 1.5. So we're talking about 7 times, 7 times PE multiple for this company. So extremely cheap. And you can see the trailing 12-month PE 7.48. I don't know why my fundamentals are not opening up here on TradingView, but let me try some other tab and see if it opens up here. But forecasted earnings for the stock, it's not opening up. I don't know what's wrong with TradingView, but really, really cheap stock here. But like I said, just because it's down 75% doesn't make the stock undervalued. But yes, it is trading at a very, very low valuation multiple right now. They're not as bad as Enphase. I would say they have a great turnaround story. They do. They really do. This is a stock that, somebody was asking me about a company that was incredibly undervalued, Naman. I would do more research on this as well because it's fallen off a cliff because of its quarter-over-quarter cyclicality, but it's trading now at a very low PE multiple at the moment. Okay. When are they going to talk about Rashford to Villa? To be honest, I haven't been keeping up with the latest updates on the Premier League. I know Liverpool is very close to winning, but that's about it. I have not been keeping up with the latest updates in the soccer world or football world. Just been way too busy with other things, and especially since United has had such a terrible season. I've just been, whatever, it's kind of write off. When you've got United down 15th, Tesla down 50%, you're just kind of write off the year, the entire year. You're like, okay, let's come back next year. Okay, so again, if you have any questions, let me know. We got over 600 people watching, everyone. Make sure that you drop a like and subscribe if you haven't already. We're going to do the unboxing very soon with all of you to celebrate, and it should be a lot of fun. If you can consider NVIDIA, why not TSMC or ASML? So I like both of them, Luis. I like both of them for different reasons. In the entire semiconductor ecosystem, NVIDIA is the designer, ASML is the equipment provider, TSM is the foundry, the manufacturer. So I like all three, to be honest. And ASML is part of my shopping list as well. I believe it is. I'm pretty confident that it is part of my shopping list. TSMC is, again, another really, really good company. It does have a little bit of that political / geopolitical risk, between Taiwan and China and the US being involved. So that risk, there's no way to model that, but I like all three. So Mitchell says, Trump said he spoke with Xi. China said nothing has happened. What is going on? That is exactly how I feel. Because yesterday we kind of discussed that in our market update where, you got one party saying one thing, the other party saying something else. So I would take these, discussions and these negotiations with a grain of salt unless something's materialized and is on paper. Unless something is written on paper, I would take that with a grain of salt because, a lot of people can say a lot of things, but it's pure speculation at this moment because nothing's been finalized yet.
How about the space between Waymo and the whatever number 2 you want to pick?
Well, I'm putting my chips on Musk.
You are on Musk.
Yeah, because I don't think Waymo scales the way people think.
Their trips are up 5x.
Yeah, 250,000 a week.
No, it's
250,000
on real streets.
Go and read what Musk said about what he's going to do everywhere. I mean, these guys are just in the wrong technology.
I don't know, Jim. I like it. It was interesting because Sundar was asked a question about Waymo, and he actually said, that's the first time I can remember even being asked a question about Waymo on the call. Then he went on to sort of indicate some interesting thoughts about the evolution of the business. Take a listen.
We're also building up a network of partners, for example, for maintaining fleets of vehicles and doing all the operations related to that. With the recently announced partnership with Move in Phoenix and Miami, obviously partnerships with OEMs. There are future optionality around personal ownership as well.
Did you hear that?
Yeah.
Future optionality around personal ownership as well. I thought that was interesting.
It is. That's different from the model.
It's different from the model. It's much more akin to what Musk is thinking about with Tesla.
Well, let's remember that Musk just says it's too expensive. He doesn't like the actual technology. I never go against Musk when it comes to technology. This call was an amazing call, okay? It was so painful for someone who had sold it because the government, because, they'll just say, listen, we've got all these relationships, and the government wants to contend the relationships are illegal. And it's like, it's the U.S. government versus the U.S. Google. So they're like, one country has got a great balance sheet. It's really powerful. It's got a leader. It completely works. And then there's another country that's completely dysfunctional.
Yeah, Widowwave says, I loved yesterday's news when reporters said we'll have to figure out who's meeting with who. Seriously, I mean, this is such a funny interview, and that entire segment, that 1 minute segment, and then another one where Scott was talking about the report from Wall Street Journal, and then he was talking about what the Treasury Secretary Bessent said the same day, and towards the end of reading out those two pieces of news, he was like, okay, what do I do with this? Because he was like, one person saying completely different things, and then one party saying completely different things. It's like, what do you believe? Really, what do you believe? Just no idea. It's such a comical market right now. Pure entertainment. I mean, whether you're in the market or not, it's definitely entertaining. Every day to kind of listen to what's coming out, out of Washington and of course everything else. But so a little bit of discussion there between Google's Waymo and Tesla, of course. And, we've talked about this before. I sent out a really long post in our Discord as well. They're in a very different sort of service industry altogether. It's very easy to compare, the Waymos with Teslas, but they're catering to very different kinds of people. They're servicing very different audiences and target markets, right? Waymo is purely a, kind of like a Uber, right? So self-drive cab service, whereas Tesla is really trying to solve full self-driving. There's a lot of pros and cons for each, which I have detailed in my updates in Discord. But Google really is banking on the idea that the cost for radar is going to come, radar and LiDAR is going to come down over time, so that it makes it very cost efficient to actually own a vehicle that is going to be driving itself. And then, of course, you've got all these geo-locked limitations with these laser-based technology versus what Tesla and Elon is trying to solve is full camera vision, right? Vision-based, full camera-based, so it can drive itself anywhere in all environments, which is significantly more difficult to do than something that is more geo-locked, more limited to a specific mapping area, as well as is very costly to recreate. So those things, again, we've discussed in our Discord as well. Okay, so market's about to open here in about 10 minutes, everyone. So make sure that you drop a like if you haven't already. Subscribe to the channel. We're going to be doing our unboxing very soon. But pre-market, QQQs flat. We got S&P flat. NVIDIA flat. Tesla up over 66 basis points. And then we've got Palantir, which has been absolutely ripping recently. Also very, very flat at the moment. Bitcoin here, trading back up to over 94.5. I got 10-year treasury sitting at just under 4.3. And of course, volatility up over 0.5%. Of course, it's been getting crushed recently from its highs of 64, actually 60. And we did the analysis as well, right? On volatility, man. Let me see if I can remember the spreadsheet for that. VIX spike events analysis. Let me see if it's this one. Okay, it is. Perfect. One try, and I was able to figure it out. So this was the analysis that we did not too long ago. We talked about how every time the VIX is above 60, how long it takes for it to drop back below 30, and then what is the performance for the S&P 500 1 month, 3 month, 6 month, 1 year, 2 year, and 3 year later. And of course, what we learned is the 1 to 3 month, 6 month period is still a bit uncertain, right? So 66% probability the markets are higher 1 month, 3 months, 6 months later. But 100% track record, the markets are higher 1 year, 2 year, and 3 year later. Of course, we don't have a lot of data sets because ever since the volatility has been born, it's only happened 4 times that it's actually spiked over 60. Can you believe it? It's hard to believe, right? And I've also talked about this in our other spreadsheet as well. God, I got so many spreadsheets to work with. We can actually create a big database of all the spreadsheets, you know. But this right here is the current read of volatility, 26.89. We're at 86 percentile, so very normal right now. But you can see days above 60, we've only spent 38 days above 60. So that was already less than 1%. And above 60, we've only, hit 4 times. So those 4 times we've spent, 38, 39 days collectively at those levels. So that was an incredibly rare, thing to witness the VIX at those high levels. But then, of course, since then it's come down quite a bit, and the expectations for the markets to be higher is more. But as I mentioned before, historical analysis and statistics is one thing, but this is a market driven purely on qualitative analysis in regards to what's happening with US and China, what's happening between the trade war, the escalation or the de-escalation. So that's really what's going to dictate market momentum moving forward. Okay. So Nanavia, good morning. MoneyVest, all my investments are in AMD at an average of 124. Mara at 1726. What is your opinion on these stocks? So that is a lot of concentration in just 2 names. AMD 124. So that means you are currently down a little bit over 22%, which again is not terrible. But I would consider maybe selling some calls on some of the shares so you can actually collect some premiums along the way. And of course, guarantee yourself some profit if AMD were to rally back about 120. With Mara, $17. Again, I would do the same thing. At $17, you're not down that much. And the call premiums would be significantly more for Mara, which is going to be closer to the money. So I'd be looking at $18, $19, $19 calls for Mara as well to start collecting some premiums. And then maybe focus on a little bit of adding some other names into the portfolio, because right now it's too concentrated. 2 names seems a bit, risky in my opinion. In my personal take, of course, I'm more conservative than most investors, but just something to think about. So data shows each deal takes 18 months minimum on average to implement, Julian. So I'm curious, where did you pick up that data from? I'd be curious to kind of look into that data set as well, and see if you can kind of work together on this data. Like, I really like working with a lot of historical data. So if you've got spreadsheets that you're building on your own, and I'm more than happy to collaborate, message me on Discord, email me, and we can definitely, see how we can collaborate on these spreadsheets, because I've got so many spreadsheets to work on, and I'm just like, pulling data, running analysis, and with ChatGPT, it's been so much helpful. But if you've got ideas, things that you want to know, things that kind of spark that curiosity, that it could be anything. Like, there's limitless opportunities when it comes to the ideation process, where, we can look at different kinds of analysis. Every time the 200 SMA crosses above the 100 SMA, every time that's happened, how the markets have performed 1 year, 3 months, 6 months later, like things like that could be anything for individual stocks or for the market. I mean, there's, like I said, there's unlimited opportunities for ideas. So if you have anything, just, feel free, message, email, and we can always collaborate on that. NVO, yes, Matt, I have. They have been kind of all over the place recently. So, of course, incredibly oversold. And from its all-time highs of 144 down about 59-60%, trading at a very strong area of support now, sitting roughly around $60. Very, very oversold here. I mean, technically, even on a monthly time frame, you got an RSI, MACD, everything's just been exhausted to the downside for Novo Nordisk. But it has happened before. It's not like the first time. 46-47% decline there. Then you've got another 45% decline here. You've got another 52% decline here. You've got another 45% decline. So it's kind of normal to see Novo Nordisk. It is a volatile name, right? Because it is in the pharmaceutical biotech space. Depends very much on results and research and what's coming out of the FDA. So things like that. And of course, over in Europe. So down 58%, very volatile. Something that we are kind of used to seeing. Another biotech stock that's part of my watch list and shopping list is the Vertex Pharmaceutical. Look at how well it's held up in this entire environment. Vertex, I've noticed, does really well when the entire market is selling off. This stock, the way it performed in 2022 was just incredible. Absolutely incredible. I mean, it was unbelievable how well Vertex did in 2022. Same thing so far in 2025. The stock is actually green year to date, up 22%. So far in 2025. All right, market's going to open in about a few minutes. Again, thank you so much for joining, everyone. If the audio is low, it's been fine so far. Hopefully it is not too low. Maybe if you can try and turn up the volume on your end, see if that works. Apollo Academy, I think that was the original report. I will definitely research that. So, okay, hope you all are ready for market open. You got QQQs essentially flat, so is the S&P 500, about as flat as it gets. Tesla back over 262, up almost 1%. And we've got Nvidia up about 0.5% as well. And we'll be building a lot of spreadsheets for individual stocks as well. For a lot of individual stocks, I think that can be very helpful for trading, for investing long term as well. So that is something that I will definitely be working on. So let's take a quick look here. Palantir is up 24 basis points, not a whole lot. We got SoFi. I sold some SoFi calls yesterday at $14, expiring in a few weeks. $12.47 is where it's at. We got Robinhood right now up over 1.5%. Was up 7.8 yesterday. Very nice recovery for Robinhood as well. 62%. Absolutely incredible. Do you keep rolling calls if it shoots up too fast? Yes. I mean, that's the idea. That is something that I do like very often, but depends on the stock, the price. Sometimes I'll let them go. Sometimes I'll keep rolling. With Nvidia, I've been rolling for like almost a year now. So
we're leaving and going to Rome, where we'll be attending the funeral of Pope Francis. Some of you are going to go. Anybody going? And it's going to be very interesting. We're going to meet with a lot of the foreign leaders. They want to meet. Trade deals are going very well. I think Russia and Ukraine, I think they're coming along, we hope. Very fragile. And Iran, I think, is going very well. We'll see what happens. We're working on plenty of things that shouldn't be worked on because none of this stuff should have happened. This should have been taken place by Biden. It should have been fixed by Biden. but he couldn't do it, nor could he come close to doing. So anyway, we're going to Rome to pay our respects, and we'll be leaving that same day. We'll be coming back home tomorrow night. And I'll see some of you over there. Otherwise, I'll see you on television.
How was the Whitlock meeting this morning? You said you spoke with President Xi. Have you spoken to him since the tariffs? When was the last?
I don't want to comment on that, but I've spoken to him many times. Yeah. From Japan. From Japan, I'm getting along very well with Japan. We're very close to a deal.
That is the president on his way to the Pope's funeral in Rome, addressing some questions about his time interview, Jim. He doesn't say when he has spoken to Xi, although we know he has spoken to him over time, a few dozen times.
Well, it always amazes me that we had Kyle Bass on earlier on Squawk, and he just said, look, one country lies, one country tells the truth, China lies. I find these talks unfathomable. I don't see any progress. David, do you see anything that indicates... Hey, David. But I'm asking whether you see anything that indicates that there's let's say that there's an ongoing talks that could lead to something.
No.
Yeah,
no.
good.
I don't, I mean, maybe behind the scenes, but no, nothing, nothing at this point between the U.S. and China. To your point, there's a lack of credibility perhaps on both sides given previous
Well, look, I mean, you remember when the president talked to Zelensky about who's got the cards? Well, I mean, both guys think they have the cards, but only one guy has the cards. You can't have the same cards.
Who would that be?
Well, that's the problem. We don't know.
It is interesting. You hear a lot now about how far China's come. I know columnist Thomas Friedman has been very vocal, having been there a few times recently, saying we don't recognize the advances they've made in key areas, and we're not dealing with the same China that we were 5 years ago or pre-COVID.
Kind of reminds me.
I haven't been there, and it's not that clear that making a visit is going to necessarily give you the real information you need to understand their strength, but to the point where they are ahead of us in robotics, ahead of us in EVs, ahead of us in solar panels, ahead of us, they've made a lot of advances.
Yeah.
We're trying to catch up with them to coal.
B of A's Hartnett today argues that peak U.S. exceptionalism was around DeepSeek, because in November, that was when U.S. hit an all-time high versus the rest of the world. He thinks, Jim, that secular dollar depreciation is still the cleanest investment theme to play.
I know. I've got to tell you, when you look at a Colgate today, and you see how much they benefit, you say to yourself, like J&J, the thing that almost didn't save their quarter, but what made it so that you kind of liked it is the weak dollar. So remember, most of these companies are like, wow, bring it down. IBM and people were saying maybe IBM is making too much money from weak dollar. I happen to like IBM here, just for the record, but the companies themselves are very pro weak dollar. And so when you speak to them offline, they love it. All I hear about these days is we do not have enough power to be able to beat the Chinese, enough actual energy in our grid. Our grid is so inferior to the Chinese that we can't keep up.
Yeah, again, it goes to the point of what you said. Who really has the cards? Now, by the way, we are going to inflict significant pain on the Chinese economy.
Absolutely.
Nobody argues about that.
Absolutely.
The question is, will they be able to take that pain, or do we blink first? Now, the president already this week has indicated a willingness to take the tariffs down, and it's not clear that there's really a negotiation going on.
No.
So, down how far, of course, remains a question. Right now, if you are trying to import anything from China and it's got 145% tariff on it, you're not doing it. So,
but if you take
to your point, it's an
look what
embargo.
we have up here right now, GE Healthcare.
Yeah.
That is an exception that they realize they need equipment, MRIs. They need MRIs.
Yep.
So, I mean, they're not just, we make some things here that they need.
Without a doubt.
Right. By the way, can I just say that you see that exception made and you say to yourself, wow, you know what? They're trying to get healthcare better. And remember, there are hospitals in Shanghai, 500,000 people per hospital is a lot of people. They have levels of cancer there that has made it so, and this is sad, I mean, that you want to do all your experimenting because they just have so many people who have cancer, and you can do it. And they're trying to find the drop of blood that indicates what cancer you could have. And they're ahead of us in that.
Well, their number of STEM grads is a multiple of ours here in this country. Yeah.
Multiples. Yeah. Hundreds of thousands versus 40,000, something like that.
But how'd they do in the draft last night?
Not too well. I don't know.
Can we just focus for a second on Jalen Hurts?
Of course.
I mean, come on.
Yes.
I mean, we have the NFL.
Yes.
And I think that's, I mean, what do they have?
Nothing. I don't know what they have.
What?
I don't know.
No, were you able to hang with Jalen at all?
I was vetted. And Jalen is he's an incredibly nice young man.
There he is.
He's incredibly
There's
cool.
Jim.
And I said, look, is there anything I can ever do for you? And he said, well, there might be. I said, well,
what did he say?
there might be.
Oh, there might be something you can do for him.
Yeah. It is still funny. I mean, we happen to have people, we happen to have an industry of people who are loved.
All right, everyone. So that's going to be it for this Market Open live stream. Give me 30 to as much as 45 minutes. I will be back. Make sure that you tune in for that live stream as well as we do the official unboxing. This one, I wanted this to be Market Open only, and I'm just waiting for my family. My nephew is sleeping. I want to video call them as I'm opening this as well. So thank you so much. Markets are very, very flat right now. I'm going to share the link in our Discord, and also on YouTube it's going to be available. So make sure that you tune in just about an hour. I will be live very soon to celebrate this with all of you. And I'm going to take questions. Doesn't have to be about the markets, but bring your questions and I will be going over everything. Doesn't have to be about the markets. It could be about, business. It could be about content creation, personal life. I'll take what I can answer, but we'll be live once again in less than an hour. So thank you so much. Hope you all have a fantastic Friday. If you're going to be able to join us, great. If not, hope you all have an amazing weekend, and I'll see you all again shortly, and of course next week as well. So take care. I'll be live again